Hello and welcome everyone to ATC's fourth podcast. So this is going to be another student edition, so back-to-back student edition as Rich is out of town. So we're just going to fill it up with another student one. I promise Rich will be back soon and we'll hit right back into those. So upcoming content that we have to look out for on YouTube is the trade breakdowns weekly. I'll be dropping those as long as we get those obviously high percentage trades. I record them every day. League class content. Just dropped one yesterday, so give that a watch. That's a full hour. I know it's quite a bit of time, but highly valuable content there. Weekly podcast series, obviously, and then that swing trade series is still to come with Rich. We're planning that, and then I'm going to be doing coaching sessions as well with Rich one-on-one that will be recorded, and that's going to just give you guys an idea of like where I'm at, my state of trading, and how Rich is coaching me. So that's some new, refreshing content. So, and then if anyone has recommendations on what type of content to get into, always open to that. And I definitely want to hit that content video side for this new year very hard. So always open to those recommendations. So diving right into our guest this week. Obviously, it's a student. He's been a relatively newer student, but he also has a plethora of experience in different courses. And I find it interesting picking his brain as he's transitioned to our methodology and tape reading. So that's really why I wanted to bring him on and just kind of discover that mindset of just beginning tape reading. So it's my pleasure to introduce Vinny. Hey, Vinny, how you doing?
Doing well, David. How are you?
Not too bad. Can't complain. So I kind of want to first question is I really wanted to just ask you, what is your trading experience? Tell us a little bit about yourself. Just kind of give the audience and get a little bit about who you are,
Yeah, sure. So, as you stated, my name is Vinny. I've been trading full time for about 3 years now. And, really where I started my trading journey is, I started trading with gappers, the stocks that were rising the most during pre-market. And, the strategy that I looked to really trade those types of stocks with is momentum trading. So a lot of it was based on really more price action and volume. It was more of a flow trading type of approach. But as I've stated to you, multiple times, one of the reasons why I sought you guys out and why I signed on with you guys is because what I started to realize is there wasn't really too quantifiable of a way of making that strategy sustainable as I tried to kind of scale it up. So, most of my trading would be based on price action and volume. And I would typically use indicators. I would use things like the 9 and 20 exponential moving average. I would also use the VWAP indicator, which are great. But, for example, if I wanted to trade a VWAP breakout trade, right? A VWAP breakout setup, what I would do is I would look at the price action and the volume coming back up into VWAP as we're getting to it. And that's really kind of how I would base my trades. And then as we approach that level, I would have several levels that I would pretty much mark out. And the way I would kind of navigate through that trading is I would look to see how the level 2 and time and sales responded to those levels. Did it speed up? Did the price happen to skip? Did it keep tapping that level and bouncing right back off of it every single time? So, it was really more of like a feel type of approach to my trading. So whether it's, the break of VWAP or I'm tracking the pre-market pivot, the pre-market high, it's going to be one of those levels that I would really kind of look to take a trade off of. But, what I kind of ended up realizing is, you would kind of take these trades and it would just be a very singular approach, meaning you're taking it one trade at a time, which is fine, but there wouldn't really be that kind of like overall understanding of what the stock had to eventually do. Understanding what it's going to do right now is great, but a lot of times I would kind of be shaken out of a lot of my setups because I just didn't have the conviction necessary that maybe understanding the market maker's intentions gives me. So that's kind of really where I've been with it. And I think that the methodology you guys teach and the psychology aspect of it has really allowed me to see what I was doing wrong with a lot of my momentum setups.
So with that momentum setups, like for me, I've only ever experienced the tape. I only know what it is like to follow a market maker. So I can't imagine what just following price action and volume really entails. And when you talk about momentum, like how is your approach with learning momentum? Are you just specifically dialed in on volume and price action? Like what was that learning curve like? Just solely focused on the price action and volume.
So that's a great question. A lot of it in the beginning is really understanding you have to be breakout or bailout with it.
Mm,
You can't hold and hope. I've gotten to so many trades where maybe it's a cheaper stock, and it's I get in at 350 because it's come down from 5, and how much further down could it go, right? Um, and I would get stuck there in places like that a lot. So I'd be kind of looking to time the curl back up, if you will,
mhm.
and that would get me into a lot of trouble not understanding why it came down. Is it coming down from aspirants? Is it building on bids? What is it doing, right? So a lot of that piece was missing, but I would really like to see, for example, right, if I want to get into a momentum trade and the high day volume bar is, let's say, a million shares traded in that bar. I would really kind of try to gauge whether, if we're 15, 30 seconds into a candle, are we going to have the ability to match that volume or surpass it? And can we do it with the appropriate price action? So that's ultimately where it got to. But the learning curve in the beginning was really understanding where you can get in and where you can take a safe entry and where you're going to be able to get another entry out of something. And ultimately, what it all came down to is I had to really take a breakout or bailout approach, because whenever I didn't, I could have the best day in the world and I would never have a problem with making money, but I would have all the problems in the world keeping it. So, that's really where the learning curve kind of came in. I really had to learn how to keep my profits because, if you don't know where a stock is going because of which market maker had to make X amount on it, you don't know if it's supposed to keep going or not. So a lot of the times you're kind of guessing, and the last trade of my day would typically be a loss. And that's kind of how I knew I was done for the day, by losing the last two or three trades.
Interesting. That's such an interesting approach, just that whole momentum based. Um, so kind of transitioning to our tape and our 1 through 4 methodology. I know Rich has really created something that's just you can't match it anywhere else. And how we use a tape and we divide it into the regular time and sales, which is non-filtered, and then our filtered, which is divided by 100, and we're able to identify smart money, and then through that we're able to set up intentions based off what happens on average, right? And that's how we get our 1 through 4 setups. And
Right.
those 1 through 4 setups in theory are very, very simple. Just you understand controlling prints, you have to understand print personality. It's really a story within the tape. So how has the 1 through 4 methodology and understanding what market makers intentions translated into your momentum and your price action and essentially how you traded before? Like how are those two meshing together, and what have you learned so far that's really brought your trading to a new level or essentially where you're at?
So there's quite a few answers to that, but where I would start with it is, as I stated before, when I'm trading price action and volume, and again, I see the tape start to speed up. I see new buying start to come in, which I didn't necessarily know that was the term at the time, but when I started to see new buying come in, and I saw the price skipping on the level two, I saw the price action following it. That's how I kind of would get into a trade, and where the 1 through 4 setups have really transformed a lot of what I'm doing is I have an understanding of why it's doing that. Why is the tape speeding up? Why is there new buying? How does that fit in to where this has to go overall? So what ended up happening is a lot of the trades that I used to take, even if I perfectly timed the entry, I couldn't have gotten in at a better point. There was literally such a small chance that I'm holding it for either most of the move, or the goal that you guys have a lot is 60 cents on the dollar, right?
Right.
It would be, that would be very difficult for me to attain, because guess what, if the price skips up 30, 40 cents, you kind of have to take your profit there when you don't know what else is going on.
Okay.
Because how many times have you seen a trigger and it comes right back because the volume just kind of isn't appropriate, or you haven't seen the prints that you needed to see within the substance of that trigger? And that's something that I didn't really know to look out for. I kind of didn't know what I didn't know when I was trading it like that before. So what the 1 through 4 trades allow me to do, I can pick my spots a lot better. I can't tell you how many triggers I let go because I just don't see what I need to see out of them now. Whereas before, if I let it go, I'm not making my 30, 40 cent trade. Whereas now, why would I focus on a 30, 40 cent trade where there's a high percentage chance of me getting shaken out when I could just wait for the real setup to be there? And that's really where, my foundation has changed tremendously because of the 1 through 4 setups. I think the psychology of the prince is really a difference maker.
It's really, Rich says this a lot. We're really like getting into the market maker's chair, right? It's like we're sitting behind them and we're at their desk and we're watching what they're doing. And through that, we can create the story and dive into the psychology. Okay, what are their intentions with these prints? Are they building? Are they not building? And if they're building, and if they do end up pulling back to satisfy those, then we know we have our number 4 long trade setup. And if it doesn't and it continues to push, we know the farther away the stock gets, the larger overall the pullbacks are. So, I mean, the foundation that Rich has created for us within this methodology is all psychology based. Is who are we following? What are their intentions? How are they going to take retail's money, or how are they going to allow us to make money with the retail? So for me, I just like, from talking to you and chatting with you, that momentum, it's almost like you're missing. It's just like almost going a little blind. I don't know if it is being blind a little bit, because you have that price action, that volume that you can rely on. But like we're talking about those breakout bars, yeah, we have that, say, high day breakout bar, and we know it's going to retrace a little bit because of volume sustainability. But if we're looking at the whole setup and the psychology of the setup, and the market makers have been accumulating all day, and it's been obvious that they have X amount of money they need to make on their position, that's a different story, right? So we're trading the overall story rather than a little snippet of the price action. So that's interesting to me, how you pretty much took your price action and then are molding it into the overall story and what the market maker needs to do.
Yeah, for sure. And I actually have a little bit of a story for you about a trading day that I had in the last couple of years. And I remember this like it was yesterday. And it's only now that I understand what actually happened in the situation. And
Oh.
this particular day actually bothered me for quite some time. So it was on a stock, JFIN, right? JFIN. And it was part of like that summer, I believe it was of 2020, where you had gappers that were going from 10 to 25 left and right. And there was just a ton of momentum all around. Very easy to get sucked into things. And I took the flow trading momentum approach to trading JFIN. And it started out as from 9:30 in the morning to 2 p.m., 3 o'clock. It was the best day I've ever had. I took 17 trades and I hit on every single one of them. So I was 17 for 17 on the day. And, long story short, I'm trading it around 3:30. And
Mm,
it was the trade that I decided to size up on, right?
mm,
Where I get the rug completely pulled from me because I had no understanding of how far this stock went without a pullback, which means it ultimately needs to do it all at the same time. That, I literally blinked and the stock went from like 22 to like $16 or something ridiculous like that in a couple of halts. And, I ended up losing 4,000 on the day.
mm.
And, it was one of those days that was really an eye opener because how do I go 17 for 17, but lose $4,000 today? You know?
Yeah.
And that's when it gets frustrating. And, now when we know shake time is 3:30, we know if it's gone too far without a pullback, we need a solid entry on it, or we're going to look to take it short. That wasn't my line of thinking at the time, and it ended up costing me a day where I did everything else right. I thought.
Right. And I'm going back to that trade. I'm sure your rules within that price action said that that trade was plausible, right?
Yeah, I mean, it literally worked out 17 other times that day. And then
Yeah.
it's the one that didn't that literally just gave back everything and then a lot more.
Yeah. And that's the crazy part about trading, is just you can take 17 trades and one of them just, and I'm sure that brought a lot of emotions too, right? Just
Oh,
sitting there at the end of the day.
yeah, for sure. I mean, there's a long conversation you kind of have to have with yourself after something like that because it's pretty demoralizing when you feel like you've done everything right. It's something you've worked at for a long time, and you're still having that type of result. And ultimately, I would go through all of it over again, right? But at the time, it's really hard to see that bigger picture. And it makes the next day trading so much harder because you second guess everything that's worked for you up until that point, and then the most frustrating thing, what adds insult to injury is, you lay off of a setup, you should take per your own
Mhm.
rules. And you then decide you decide which setups you're going to take and which ones you're not. And then all of a sudden you're only picking the ones that don't work out. And then, it's hard to really get the ball rolling again after that.
So it seemed from that type of momentum trading that really defining your percentage in terms of like each trade is kind of difficult. I mean, each one of those trades is essentially, I don't know how it works, but it seems like these setups are all similar and you take them consistently. But it's a different
Yeah,
type of percentage when it comes to understanding what the market maker needs to do, and rather than just looking at, okay, this is a setup, it
for
happens.
sure.
Yeah, I don't
Like
know.
with 1 through 4 trades, right? What does Rich tell us our minimum risk to reward should be every time, right? It
So
should
it's
be
1 to 4.
right. My average momentum trade is 1 to 1.
Mm,
So, I tend to hit on a little bit higher percentage of them, but the ones that lose big because they get whippy. And overall, you're risking $1 to make $1. So, as far as sustainability goes
yeah.
and sizing up, I mean, that's just not conducive to it. And there are guys that have done it. I do see, a lot of people that do have success with it. But no matter how far they get in their career, they're still losing the last 2 to 3 trades on their day and giving back a lot.
Yeah. And I feel like with the tape, that's something you could cut out as well. It's just understanding, okay, this is way overextended, even with this price action volume to the upside that says the momentum trade is there. We know the substance behind that is not high percentage.
Oh, absolutely. I mean, how many times have we seen a stock push into a level and then not print at that level if it hits it, right? And then we kind of know to expect a movement there, right? Or some kind of reversal. You just go in blind if you don't know that. And
Mm.
whether it's impossible to understand, did 3 levels print ask prints on this push up, or did 5 levels print ask prints? You kind of just don't know if you're not looking at that from the start.
And you never really thought about that trading
I,
momentum.
I
It's like,
didn't. I didn't.
okay.
I,
Okay.
I, I again, I didn't know what I didn't know.
Right. Right.
I'd be watching the tape, but I wouldn't have filtered out orders over 1,000. So I'm kind of seeing everything happen at once. And you see how quick the tape moves at times, especially
Oh,
when
yeah.
volume's pumping. You have a hot stock, it's doing 2 million, 3 million shares a minute. You're not going to sit there by hand and pick out or orders over 1,000, and just not going to be able to do it. So, the way you guys have set it up and the way Rich has really set up his methodologies, it's really to get the best understanding possible of what has to happen at that level. And, I can't tell you how many times, I look at what you post throughout the day, and to this day, it's an eye opener because, you'll catch when stocks aren't printing at a level, or you'll catch when, okay, we know market makers printed at X, Y, and Z level, and they have to make X based on that. And that alone is extremely valuable. Just to know that, it's going to give you a lot more conviction in your trade. You're not just hitting the button and saying, I think it's going to go up. You're saying, no, definitively, it makes sense that
Mhm.
they have to make $1. They have to make $1.50. They have to make $2. Why would they print like that if they didn't? And that's been a huge change for me as well. And that's helped a ton for sure.
Yeah, that overall conviction of what the market makers need to do, it takes time, but Rich teaches it so well within our courses. It's just, okay. And print personality has to do a lot. And what that is just understanding what the market maker prints on average and what an average position that he needs to, average position that he takes within the tape and how much he needs to make on that position on average. And then we can compare it way over print personality. And that means that that's just the tip of the iceberg of their position, and their real intentions are to build on that position before they make money. So we really break all that down into that 1 through 4, which is really just the most simple bare bones. And within that, it's just half the battle, right? Understanding what the market maker needs to do is half the battle, because oftentimes we'll get days where we get 0 pullbacks and market makers have not built at all. So we'll have 2 or 3 consecutive days where market makers won't pull back how much they showed us based upon their prints that they need to pull back, and it'll just run. And there's days that it can be difficult as a tape reader because we're so within this methodology so defined as, okay, there's this many aspirants, but print personality, this is what it should do. And I know early on I would always just take the trade based on what it should do, not what stock is telling you and the timing aspect behind it. So I think we're kind of polar opposites, where you used to trade all that momentum and that price action, and you used to have great like a knowledge of when something's going to run and when the price action is going to dwindle. For me, it was okay. I know what this market maker needs to do, but I'm still learning the execution side. How do I get a good entry? What's good timing? What are timing prints? So that's kind of, it's interesting how the conversations we have is, I feel like we're two polar opposite starting positions, where you're learning about the substance behind the price action and momentum that you're trading and the tensions of the market maker. And I'm learning, okay, I know the actual story and what the market maker needs to do. Now I really need to define that momentum, that price action, and when something's going to continue, when something's not going to continue, when I can scale out of my positions. So it's
Right.
two, I think our conversations are very interesting, and I hope everyone at home can really drive some value out of these. But I just think our two positions kind of polar opposites and can create just some of the greatest content. And I definitely want to have you back on another episode, because we have such short time here and I want to keep it at 30 minutes. We're not quite there yet, but it makes me want to transition to the next question, which is what is your most eye-opening experience within the tape so far?
Oh, it's without a doubt understanding the market maker intentions. Again, the psychology that Rich teaches and the psychology that Rich breaks down, I mean, it sincerely is the difference maker. When you understand the psychology of why you're seeing what you're seeing, it's going to add so many more layers of confidence to your trading, and
Mhm.
it's added layers of confidence to mine already. To your point before, I always felt like I was trading behind. Looking back at it, the way I was trading, I was absolutely trading behind whatever they were doing. Like it was impossible for me to anticipate exactly what it was going to be. It was just kind of like sitting there anxiously until, do you get it or don't you? Like there was no real anticipation there with much conviction, unless something was doing something that it didn't usually do.
Right. And I know you had a question, like this is our previous conversation about percentages. And I wanted to dive into that a little bit. I don't know how you define percentage with momentum, but the way we define percentages with the tape is, okay, 60% is our controlling prints, which is what the market maker tells us. And from there, we derive his intentions on how much he needs to make it, how much he needs to build. And then from there, we need to evaluate the rest of the variables. Okay, is the personality of the day providing those pullbacks or not? Are we getting small pullbacks, or are we're getting regular or none at all? So we have to evaluate that within the personality of the stock itself. We need to evaluate range. Is there range left on the stock? We need to evaluate other variables such as print lines, orb lines. And then we dive into further timing prints, such as like ballsy prints, leak prints, prints
Mhm.
at minor levels, off level prints. So there's a lot
Co-star
more,
prints.
there's a lot of prints outside of controlling prints at the level that can really indicate timing. And like you said before, you felt like you were a little bit behind, and the tape is, we read the information and we're almost ahead of, we're reading, I mean, it's called head of the charts for a reason, right?
Exactly.
It's,
Yeah.
we're ahead of what the chart's going to look like, because that the market maker comes out and shows his hand and his intentions beforehand, and he
Mhm.
sets up the rest of the stock based upon what he shows within the tape. So I mean, it's like a blessing and a curse knowing what needs to happen, because in the early stages, I would always just jump in and rush the trade. But in terms of percentage, that's how we add it: 60%, 10% to trigger. And then we add print lines, other variables, other type of prints. And then we base pretty much from our baseline of 60%, we add all the way up to 99, because there's no such thing as 100% trade. And that's how we gain that confidence, right? So within our
Right.
journals, we add all those variables, and those variables can get super high. Like I can countlessly, like on many journals, see like 90+% trades, where it's just all these variables are stacked up for this specific trade. And almost those variables, you can analyze them before it happens, because the tape comes in and tell you this is the intentions. Now look at the variables. You have the time to go look at the variables, the personality, the stock, and then you can be ahead and then anticipate that trigger in that entry.
Right. And to answer your question, how would I quantify, the percentage of my trade? And it's pretty simple. It's a pretty simple answer in that my approach was not as sophisticated as it is now, because of the methodology that ATC teaches and Rich teaches. Because I didn't have a quantifiable 60% is going to be dedicated to this, or 10% would be dedicated to the trigger, or to the show of 60% to the show of hand. I didn't have that. It would really be more of a field-based approach. And, that's really why I experienced a lot of the losses that I did early on, is because I took that approach, and I didn't really have anything to fall back on in terms of what my percentage of the trade were. All I could tell you is that my average ended up being, I would hit 65 to 70% of my trades. And, my risk to reward ratio would be anywhere from 1 to 1.5, and maybe 2 on a good day. But that's as far of an answer as I can really give you on that,
Right.
because it just simply wasn't as sophisticated as an approach.
So as you've been transitioning, have you had any of those instances where you've taken those big, huge losses, or now is there setups you're like, okay, I know the market maker's intentions are, I'm not going to take this specific trade because of the intentions that he already showed. So have you cut out some of those trades so far?
Oh, for sure, for sure. And it's not close.
Mhm.
I can't tell you how many mistakes I've repeated over and over again because I didn't understand what was going on. And when I kind of started to see what was going on, by reviewing your content, there were so many eye openers there. Every day when I ask you questions and you give me an answer, there's another aha moment. It seems like, every time Rich or Doug or any of those guys speak in the chat, there's just light bulb after light bulb. Just because there's so much value there, and there's just so many things that I wasn't really in tune to. I wasn't really on the same frequency of a lot of the things I was missing. So, once I was, it's very easy to, once you kind of start to see that, it's much easier to address it, because, before I didn't really know what I had to address, and why wasn't this trade working out? I didn't know. That's because, we came into a level light on prints, or whatever the case may be. We knew that they made the money that they had to make on it, and that we didn't see anything that supported a move higher. So that's really that's really where I'm at there.
Yeah, I mean, honestly, I get excited just hearing your personal growth. I know we talk every day in the chat, but just your experience so far in transitioning to the tape, and what you've pretty much, the mindset you've cultivated and the psychology that you've already sucked up so far, is it's made me happy, and I wish that many students can also experience that. So kind of last question I kind of want to transition to is, I know you have a boxing background. We talked about this earlier in
Mhm.
the week. How does boxing relate to that mindset of an elite boxer and being in that ring with another individual? How does that relate to maybe the smart methodology or just trading in general?
It's really a funny comparison at first, because in both of these, in trading and boxing, you have to acknowledge your emotional vulnerabilities. Otherwise, being able to carry out a game plan is just not going to be possible. You have to really get to know yourself, and what makes you tick, and what's going to, potentially cause you to stray the course that you're supposed to be on. And when it all comes down to it, boxing really is speed chess. So
Mhm.
what a lot of people don't realize is that 99% of the time, it's the more cerebral individual who is going to outperform the other person. And I think that in my experience with both, I mean, the key to any success that I've had in them is developing like this elite calmness to the approach. Because the truth is, both of them move so fast at times that they can be overwhelming. So what I found works for me is that when I'm calm, I could see things slower. I tend to not miss as much when I slow things down, and I see them from 5,000 feet, so to speak. If I can't see it from a very high level view like that, then and I'm staring at my screen 2 inches away from it, I'm gonna miss everything. So, for example, I used to have a rule where I have to be able to see the see the trade from my couch, otherwise there's no trade. If it's not obvious when I'm looking at it from 5,000 feet, then I'm most likely forcing something. So, a lot of it goes hand in hand, with boxing or trading. You can't force anything. You really have to be able to be calm no matter what happens. And I think a lot of that is going to come down to your mental preparation before, because
Mm.
if the first time it's going wrong is when it's actually going wrong, you're going to be in trouble. And what I mean by that is, you have to be able to envision things going wrong before they do, right? How are you going to react? how flustered are you going to be? What's going to be your emotional reaction? And it's the same thing in a trade, right? If you didn't expect to be down on a trade and all of a sudden you are, what happens to your ability to make a quality decision there, right?
Right.
Um, and it's really funny, when it comes to game plans, they say a good boxer makes their opponent pay for their mistakes, but a great boxer makes their opponent make mistakes. And I think in a lot of ways, like market makers are great boxers, because they're going to tailor their game plan into retail making mistakes. So they're not going to be
Mm,
good boxers and capitalize off mistakes. They're going to be great boxers and make people make mistakes. And I just think that there's so many similarities there.
absolutely love that example. That just hits home right there. Well,
Yeah,
Vinny.
and with the experience you have, I
Mm,
know for a fact you've probably seen that time and time again where you're in a trade, it's not working out, and if you're not prepared for it, right, especially in the beginning, it's tough to deal with, right?
yeah, well, more so in the beginning. I think as you get seasoned, right, like any boxer or any high
It
athlete,
gets easier. It gets
yeah,
easier.
you take the hits in the beginning and then you start to slow things down. But in the beginning, I don't think we're wired. I think very few people are wired to just have everything be slowed down initially. I think I don't know. I don't. For me personally, I know I went through that phase where everything seemed like a rush, and you get
Right.
panicked and
And
emotions take over.
when I watch your trade breakdowns and I hear you reciting your game plan as it's kind of
Mm,
maybe you're seeing a bunch of prints that don't necessarily fit into the picture right away, and it's easy to react to prints that are just showing up like that. But I feel like you reciting your game plan like that keeps you calm, and it
right.
allows you to make those elite level decisions because of the calmness you have from that.
Right. And if you watch my breakdowns as well, I feel like I repeat myself a lot and often. I'll repeat the same things over and over. And I'll do that within my trades as well. I'll keep repeating the market maker, how much money they have to make on their build and how much money they have to make on their position. The more and more I repeat to myself, the more and more confident I become on understanding what needs to occur. And I allow myself to follow that game plan. And as other variables come in within the trade, I evaluate my game plan based upon what new information comes on. So I have a set game plan, and I'm in the ring. And then if new information comes about, then I'll adjust accordingly. If it's limiting exposure, if it's taking another entry back to where they're building, you kind of are be able you become you can adapt a lot more once you know you have a strong foundation of what needs to occur.
Exactly.
Yeah.
Yep. Exactly. For sure.
Well, we kind of hit that half-hour mark, and I wanted to thank you for joining me. I feel like we had a really quick session. I think we were talking before how this was going to go so quick, and it already
Yeah.
has. So,
Absolutely.
so I'm going to have you on again, as well as many other students. And I sincerely appreciate you coming on, and look forward to your growth within understanding the tape.
Well, I appreciate you having me, man. And I really appreciate all the help throughout the day. I mean, you guys have helped me exponentially in
Mhm.
such a short amount of time.
Yeah, and also everyone that's out there, look out for some like trade breakdown videos, but we're going to do them more as a collaboration. So we're going to kind of watch a tape and I'll break it down. And then Vinny's going to ask me a couple questions and we're going to go, it's more interactive breakdown more than just me talking to myself. I think it provided a lot more value. I'm also going to bring in some other students as well. Vinny, probably Derek, others that want to volunteer to do that as well. So look out for that. But Vinny, appreciate you having you on and I hope you have a wonderful night.
You too. Thanks, David.
Yep.